Hey guys, what's up? This is Andrew for trendlines.com. So yesterday we had an overview of the equity market with the Nikkei, the Eurostoxx and the S&P. Today I want to go to the forex market because the forex market is the most liquid market in the world. So of course it has a lot of information. For me, it's kind of a leading indicator of what is going to happen on the equity market. The reason behind that is I think that, technical analysis is just about analyzing where the market is going by analyzing the flows. And the real flows are in the forex market. The most traded pair, I think, is the euro dollar, and maybe the second one must be the dollar yen. So we're going to have a quick view on those two today and make some technical analysis. So once again, technical analysis is to try to find some support levels, resistance levels by using different tools. I like to use trend lines, very efficient for me. I like to use Fibonacci, Elliott Waves, principle, and the MACD and moving averages as well. So let's get into it. All right, so this is the euro dollar pair. We're gonna first, on those kind of instruments, I like to first have a very long-term view analysis, and then I'm gonna zoom in slowly and slowly, kind of a top-down approach to try to understand where this market could potentially be heading. So here we had a first move up until the 2008 crisis, and then a strong move down. All right. This move down was actually happening because the dollar was getting stronger. All right, so now, what do we see? We see here a very obvious downward sloping trend line that has 1, 2, 3 reactions. And look what is happening here. We are trying to break it, but it has not been broken on the monthly. To be broken, you need to find a candle that closes above it. So like this one, and the second one as well. This is the confirmation, So of course you can start to trade at the first one, but it's more secure to wait for the confirmation. Here, the confirmation has closed here. So if you buy here and you sell here, it's not a good trade. Then we do a trend line from here. I connect the two lows that I have here and here. So this is like kind of my strongest support, which is quite far. It's at 107, but it's still, to me, worth mentioning. Then you can have that's it for now. Then, so I go to the weekly. So on the weekly chart, what do we see? We see the same thing, is that here we have a lot of consolidation taking place. So once again, this is to me not a coincidence, This is not a surprise that this consolidation is happening at this level. It's because there is the trend line coming here and you have a real battle between the bulls and the bears. So what is behind this battle? Let me tell you what I see behind this battle. It's basically a battle for who is going to print the most between the US and Europe. Because when you print money, you're not printing, actually you're printing currency, not money. The money is, the value is the same, but you have more currency, which makes your currency weaker. It's called inflation, all right? The currency is weaker. For the same amount of currency, you can buy less. It's like you have the feeling that the price is going higher, but no, the price is the same. You just have more currency for the same kind of value. And who can print more between the US and Europe? Who can print more? Of course, the United States. Why? Because they have a stronger growth. So the market is more willing to lend money to those who have a strong growth, just because there are very good candidate to one day give back this money. Look, if you, for example, this would work, for example, for you and me. If I go to the bank and I want to borrow a big amount of money, they're going to look at my salary. They're going to say, right, this guy looks like he's doing well, so we can lend him money, and looks like it's growing, So it's very reassuring for investors to lend money to someone that has growth. If your salary is actually going lower, it means you have some issues and people would be scared to lend you. So they could, but at a higher rate. So to me, this is what is taking place here. The United States can get indebted far more than the other countries because it's the United States, and they have growth, and they are the best in the world. That's kind of true. I mean, economically today, I think it's still true. They are the best. They're just, the system is just working amazingly, and they're just killing it every day. The battle here is, are we going to have more US printing or not? Of course, yes, but would it be more than Europe or not? And I think the answer is yes. Basically, if the market is bullish, this would go higher. Or the other way around, if this goes higher, it means that the market would be bullish. I see it this way. So to me here, it's very interesting to notice what's going to happen in the coming month. And I don't know. Here on my trend line, we have not broken it clearly, and we don't know if the market is going to get lower or higher. We need something more clear. To do this, we have one more tool we haven't used yet here, which is Elliott Wave principle. Elliott Waves here can be very helpful because, let me go to the daily. It can help you to feel if this move up is finished. So very quickly, Elliott Wave principle basically is telling you that moves in the direction of the market, so here bullish, are developing in 5 waves, and moves that are corrective are developing in 3 waves, usually ABC patterns. Basically, you can have different kind of patterns. You can have zigzag for the ABC, flat, or triangle. And for the moves up, you can have impulse or diagonal. But I'm gonna, for those who are interested to know more, I'm gonna make a free video for this. You just need to subscribe to my newsletter in the link below. And don't forget, by the way, to like the video if you enjoy this, and to subscribe to the channel. And those who are gonna subscribe to my newsletter are gonna receive a free video where I explain everything about Elliott. And very quickly, because this guy is just a genius. So Ralph Ellison Elliott, he was a trader in the 30s, 40s, and he just saw that there were patterns in the market, and he spent his whole life analyzing it. So he had some issues with his health. So basically, he was just staying home all the time, and he was analyzing the data, and it was just crazy. He was the best trader at this time. He won a competition with real money trading, where he made, I think, something like 400% in a matter of a month. He was first by far, and then he, of course, explained how he did it. He didn't want to keep it for himself. He wanted to spread everything he discovered. And this is actually in his book that I read, that is just amazing, and that I'm trying to sum up as best as I can. And I'm using this for like a couple of years. And to me, it's very helpful. Let me show you how here very quickly. So we are analyzing this move. Is it finished or not? Because if not, then I know I'm going to break the trend line. If yes, then we're going to probably come back here. So Elliott is going to give us some information. So I do 5 waves. I try 1, 2, very obvious. Then the third wave, is it here? Then we have 4 and 5. Maybe, and then this would be finished. But look, why discounting is not very nice for me. The third wave is always the strongest, usually impulsive and usually extended. Extended means there are 5 waves into the third wave. Here, the third wave is weak, and I have only like 1, 2, 3 wave in it. So it doesn't look like a third wave because it's like almost the same length as the first one. It's not the shortest, so it's a valid count. It could be like this. But to me, this is not the best counting you can make here. The best counting would be 1, 2, 3, 4, and 5. Why? Because this is a beautiful third wave. Because in my third wave, I have 1, 2, 3, 4, 5 as well. Okay, so in the third wave, I have a beautiful I have 5 beautiful waves. So I think this is a valid count. And one more thing, usually when you have the second wave, that is a zigzag. So zigzag is A, B, C, very basic. Then the fourth wave is a flat correction or a triangle. And here, look what we have. Looks like this is a descending triangle. What is a triangle? A triangle is just when you have a horizontal base like this, and you have a downtrend, for example, or an uptrend, like coming from the bottom. and then it will be ascending triangle, but this is a descending triangle. And descending triangles usually take time to develop, you know, that's what is said in the book, and it's true, that's what I see too. And I think that this looks to me very much like a descending triangle, which usually develop into 5 or 7 waves. So 1, 2, 3, 4, 5, 6, 7. This to me is what is playing out. And how I know it, how I think I know it, of course I'm not sure, it's thanks to Elliott. So, and my trend lines, because it's like a combination of those two information. So what kind of trend can you make here? You can just sell here, stop loss at this level, for example. So you take your position here, so you can make 2% and you can lose, so you sell here, so at 118.8, for example, and you stop loss at 122, you know, so you can lose 40 bips to make 2%. 1 to 5 risk reward trade, we go for it. This is a nice trade. And then what do you do when you arrive here? You do the opposite. So you can have 2% to take again for like 20 or 30 bips loss, because this trend line is quite clear. 1, 2 reactions, very precise. So this is telling me if the market trades below, we have a problem. And once again, the euro dollar pair is the most liquid pair in the world. There is something like $5,000 billion trading every day on the forex market, and a big part of it is trading in the euro dollar. Why I'm saying this? Because when we have liquidity, then technical analysis is more efficient, because we have the algo that actually helping us, because all this algo, they see all of this, you know, it's been a long time they see it, but today they just don't miss any obvious trend line. They don't miss any obvious Fibonacci retracements. They are just helping us to make our trades more likely to be clean. And this I think would be very clean. Here we're probably going to have a nice reaction at the 116.05 level. All right, let's call it 116. 116 level is going to be a very strong support. So you sell at 119, 118.8, even a slightly below 118.7. And you buy at 116, and you do this for a couple of months. You can generate some nice profits. But here, if we come here, then it tells me that it was actually really looking like a triangle, all right? Because it was long in time, you know, weak in correction in spots, but strong in time correction. You know, it takes time. So this looks like a triangle, which usually takes time to develop. So if we arrive here and I have two, so here I do a trend line connecting the bottom of the first wave and the bottom of the third wave. And if we arrive here, then I would probably take a massive long position with stop loss a bit below, because we have two different supports, and I have also Elliott with me. So I have everything, and if you have two, it's enough to take a trade. And especially I would believe more in my scenario that this market will just blow up on the upside. And how far it would go, usually when you have a third wave that is extended, which is the case here, extended because in my third wave I have 1, 2, 3, 4, 5, then usually the fifth wave is the same length than the first wave, usually. So this would give us something like 4.8%. Okay, so 121.5. All right, so this is my target. So I buy here and I sell here, and then I would actually, if this plays out, I would actually wait for a retest somewhere here, or I would use Fibonacci of this whole move up, and I would buy massively again here. And this I would keep for years, because once again, if we go back to the monthly, what is playing out? If this trend line, which is on the verge to be broken, is actually broken with this fifth wave, and we go to the 120 area and we stay here for a couple of weeks, month, then I'm bullish for the coming years. And what kind of level I have in mind? Let me tell you this. I use Fib again. I connect the lowest point of this market with its highest points, and look what happens. Magic. You had this level given by Fibonacci already since 2008, you know, and this level happened in 2015. So 7 years later, Fibonacci already had this level here. But of course, you're going to tell me it had this one as well, and it didn't play out. But look, it played out here. So then, and then the 50%, of course, played out here. And now, where are we, guys? Where are we? We are on the 61.8% ratio Fib retracement, the golden number, again, that we can find everywhere, because I'll go see it as well. And we are here. The consolidation is actually on the trend line and on the Fib retracement. This is the strongest Fib retracement, the 38.2 and the 61.8 with the 50%, but this is not a golden ratio, are the strongest Fib retracement, where you find the more liquidity. And look what is happening. We had the MACD crossover as well on the monthly. So the MACD is with us, Elliott Waves is with us. Trend lines are going to be with us if those two plays out. So 116, massive long position. This is my view. And where we go to the next Fib retracement, as we always do. So we're going to first go to the 125 and then probably go to the 133. So those are my levels for 2022, 2023, you know, for the just coming years. I think the euro is going to 130, 135. We're coming back there. Why? Because the Fed is going to print a very big amount of money, more than Europe, because they have growth and they can do it. I think that the US are now in debt of $25,000 billion, and only $7,000 billion are on the Fed balance sheet. But trust me, they can go much higher. They can go to 10 billion thousand by the end of year. They won't do it. They would keep for next year and for the coming years, because the economic outlook is bad, guys, and we need to print money. We need to print money, and the story is going together with the markets going well. If this happens, it means the markets are going well, at least the US market. But let's see, let's be very careful. This can, of course, be completely wrong if we break the 116 level. So if we break the 116 level, then probably the equity market is going down as well. And it means that we need to reconsider everything, and probably get short here, probably stop our long position on the equity market if we have some, but we have the stop loss on those markets as well, and take some nice short positions, because it means we are bearish. We're going to probably revisit the low points we had in March if this happens. I don't believe it for now. I don't believe it. But Elliott Waves, once again, I come back to it, because what this guy, who is, I think, the most amazing trader in the history, in the recent history, this guy actually predicted, so he's dead now, unfortunately, but he has predicted that we're going to have the strongest bull market that ever happened, and that it's going to be unpredictable and bigger than everyone thinks. Look what is happening since 2008. In 2015, everybody was saying, all right, we are bearish. In 2020, everybody said we are bearish. And where are we? We are bullish. Where are we going? Higher. Who said that 30 years ago? Elliott. And what else he said? He said that then we're going to have the biggest crisis that never happened in the history as well. But before that, we need to finish this bull market. And I'm going to make some other videos where I make longer term analysis on the equity. And it's very interesting to see where we are in the very long run, you know, and we are very extended, but we still have some room on the upside. So yes, very quickly. So I'm done for the euro dollar. I hope this was interesting, guys. Once again, if you like, please hit the like button and subscribe to the channel. It really helps me, and it's gonna make me do more video like this one. The dollar yen pair. So what do we have? Same. I'm on the daily time frame, and what I can see here is that we have this big resistance here. Let's go to the weekly, monthly. No. Okay. So if I go to the weekly time frame, so I have this downward sloping trend line that I connected this low, this high with this high, and we have 4 reactions. So this trend line is strong. On the downside, what do we have? Where are our supports? Our supports are here in 2014. You can see multiple reactions, and here COVID-19 put the dollar yen at this level as well. So first support, second support here. Now, what is the trend? Guys, what is the trend? Here, you can just look at the MACD. The MACD is giving you the trend if you guys don't see it. The MACD is at minus 0.86, very negative. The weekly MACD is very negative because we have very strong bearish trend. Now I go to the daily. On the daily, it's negative as well, and actually we just had, so on the daily we have this trend line on the shorter time frame that is basically protecting us if we are short here. If we trade above this, it's time to cut the position. And for now, where are our next targets? So we are bearish, and our next targets are at 101.99. So I think the market is heading there. So if it comes back here, you can have a nice short position here with a tight stop loss, of course. And if it comes back here, then you can have a long position. So for now, we're just like between. If you are short, keep your position because this is going lower. You know, this is going lower. We have the MACD crossover. And we have a negative MACD, so bearish momentum, downward sloping trend line that's protecting us. Very easy to trade this kind of moves because if you sell here and your stop loss is the trend line, if you go lower and you don't buy and it comes back here, then your stop loss is already below the level you sold. All right, so you are already profitable and you stop your position. This is called a trailing stop loss. It's very nice to use those, and it's perfect when you have a nice trend line, nice sloping trend line. All right, that's it for me. I hope you guys enjoyed this video. I'm gonna try to talk about some maybe US stocks next time, like Tesla, Apple, everything. If you have anything that you think is interesting for me to talk about, that you want to see, don't hesitate to comment below. I'm gonna have a look at it, and I'm gonna try to come up with some more technical analysis that might help you guys to do your trades. So once again, those markets are very volatile. If you're having some position, be very careful, trade with a tight stop loss, and stay close to shore. I see you guys.